Business Valuation Specialist provides a smart way to prepare the core data used in the valuation. The core data is the set of historic and normalized financial statements, and the valuation approaches and methods are applied using this core data. If you've ever used spreadsheet models for performing valuations, then you've most likely experienced the process of manually reconfiguring the spreadsheets for each different assignment. You may have needed to add columns for different years, insert account line items, and edit formulas, all before entering a single dollar value. This can be a real pain and time drain. BVS solves this problem by using a series of control panels to configure and format the workspace for the financial statements and for normalizing them. Instead of merely making a list of normalization adjustments, BVS integrates your adjustments to create a full set of normalized financial statements used for analysis, industry benchmarking, and constructing normalized cash flows. The normalized financial statements also provide continuity and serve as the basis for your projections. Let's take a look at the financial statement setup control panel. This control panel lets you configure the financial statement workspace with the correct column headings, dates, and formatting. You have the flexibility to include just a single year or as many as 10 years of historic statements, along with interim statements and an income statement for the trailing 12 months. And then for the projections, you can include up to 10 years. The first 2 years can but don't need to be monthly in the event that the business is seasonal or cyclical. Next is the accounts control panel that lets you insert line item accounts. Some accounts are predefined system accounts that are used in calculations such as ratios or notes payable or depreciation. These are shown in black. The open accounts can be named as needed. Check on the accounts to enable them. Edit the account label, and they're automatically included in the financial statements. After you set up the accounts, the workspace is prepared and ready for you to enter dollar values. It's often necessary to make adjustments to the income statements and balance sheets in order to develop a more accurate picture of the benefit streams being valued. BVS lets you make normalization adjustments for any line item by using the normalization control panel and the compensation adjustment screen. Here are a few examples that demonstrate how that process works. First, let's assume there's a discretionary expense that needs to be eliminated. So let's make an adjustment to remove the discretionary expense. To make an adjustment, click on the Adjust Accounts button. Select the account that we're going to adjust, and then enter the amount of the adjustment for each year. You can also include notes to your adjustments, and these notes automatically flow into the valuation report. You have the option to tax affect your adjustments or not. For a taxable entity, BVS automatically calculates the tax effect of your adjustments, which we'll show you in a few moments. BVS also gives you the flexibility to tax affect a pass-through entity, such as an S-Corp, to treat it as taxable. While the tax courts and IRS appear for the time being to have rejected tax-affecting pass-through entities, valuators often make an adjustment to match the S-Corp benefit stream with the discount rate when the discount rate is based on returns of taxable C-Corps. To make this adjustment, you simply enter the estimated income taxes as a normalization adjustment here. The other method for matching is to not adjust the benefit stream, but rather adjust the equity risk premium in the discount rate and remove the tax effect there. BVS gives you the flexibility to handle this either way. Next, let's adjust the officer's owner's compensation account to bring the amount of compensation in line with industry levels. You can use whatever data source you want, But for our purposes, let's assume that the industry standard officers' compensation as a percent of sales is from the RMA industry data. So you enter the amount of the adjustment to bring the officers' compensation in line with the industry. You can also make a separate adjustment for payroll taxes based on the normalized officers' owners' compensation. All of your income statement adjustments are summarized in this worksheet. Balance sheet adjustments work in much the same way. Here in the income statement adjustments, you'll see the two adjustments that we've made, the one for the officers' owners' compensation, and then the other one to eliminate the discretionary expense. Again, you have the ability to calculate the tax effect of all of your adjustments, and this is often overlooked. BVS gives you flexible options, including using the federal corporate tax table, effective tax rates that you control, or if valuing a pass-through entity, you may decide not to include any tax effect at all. Here you can see the normalized income statements that now reflect the adjustments we made to normalize the discretionary item in the other G&A expense account, officers' owners' compensation, and income taxes. Then the earnings and cash flow summary gives you a picture of all of the normalized historic benefit streams, along with the detailed calculations of equity net cash flows and invested capital net cash flows. The normalized or adjusted financial statements are intended to assist you in valuing the business. They're not intended for financial reporting purposes. At this point, you have a database of historic and normalized financial statements, which is the core data used in the valuation. So now the stage is set for you to perform an analysis of the financials, which we'll review in the next video. See you there.